Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at two critical Bitcoin price levels which not many people are watching, which are giving us very strong clues as to what may be happening in the next few days and weeks. I'm also going to have a look at the increased demand for Bitcoin as per the ETF story that's been playing out and why that may well drive the price all the way to 63,000 and beyond. I'll also do the 60-day cycle as well as the overall bigger picture view. So if that sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so what are the two critical price levels that we need to be aware of whilst everybody else is focusing on other things? Well, the first one is something that I've been showing you over the period of the 2023 bull market. The first one is the RSI MTF line. And as you can see, it has a very good, important relevance for the Bitcoin price. Many times the price comes up to this level and then we get a rejection. This level here, another rejection. But once we get into the parabolic phase, just like this one here, then the price just rides along the way right to the top of the bull market there. And once again, as we came back down in the bear market, we found some resistance at this point, but it was the second point that where we found the most resistance. And I will tell you why that's relevant in a minute. But once again, once we got into the parabolic phase of the bull market last time round in 2021, it just rode the RSI MTF line right to the top of that bull market there. So the question is, where are we now? The thing to look out for here is that back in 2016, when we came and actually hit this yellow line, we can see that the price actually protruded up before the pullback, having come out of the bear market over here. In the second cycle, exactly the same thing happened one more time. We bottomed out here, but when we came up first time round, the price moved up to the next level, and it was there that we got the actual pullback. And guess what's happening now? And the question is, are we going to have a pullback? Or is the power of the ETF demand, i.e. the buying by the ETFs, is that going to make things different this time? Only time will tell, but we need to be aware exactly what's been going on. So this was the first point of contact here. And then we've now moved up to the next point of contact right at that line at 52,000. Maybe the second critical level will give us a clue as to what it's about to do. Is it going to go this way, or are we going to get the correction as per the historical perspective? And our second critical price level is being given out by our old friend, the Pi cycle. And as I've been showing you all through 2023, that the price level always hits the red line, i.e. the 350 simple moving average, before each of the previous halvings. So we got one over here, we got two over here in the second halving, the third one over here, and now we are just $12,000 away from hitting that red line one more time before the next halving. So we've got 8 weeks to go, and the question is, can we make our way all the way up to $63,000 and maintain our record of hitting the red line, the 350 simple moving average? Can we hit that line one more time for the fourth time in a row? Only time will tell, and I'm going to show you now why that is a very good probability that we may well hit the 63,000 before the halving. I just want to refer you to this particular article, and it just encompasses everything that is being said out there about the ETFs and the demand that's been created since the 11th of January this year. That the purchases by the Bitcoin ETFs are exceeding the daily production, which is 900 Bitcoins produced by the Bitcoin miners every single day. And the Bitcoin ETF purchases are exceeding that by 12.5 times. And when you consider that the majority of the Bitcoin miners are not selling the majority of their Bitcoins, they're trying to hold their Bitcoins because what they're seeing is the price of Bitcoin going up. So therefore the value of what they're mining is going up. They have every incentive not to sell their Bitcoins. So while the supply is being further squeezed by the Bitcoin miners who are producing the 900 Bitcoins per day. At the same time, the ETFs are hungry for 12.5 times more than they can produce. And we can see the effect of that demand outstripping the supply in the share price. This is where the ETF news broke back in September 2023. And if you cut off the Bitcoin price at that point there, and if you have a look at the actual Bitcoin price and its chart here, and just compare it with the first half of that, it has a completely different structure. So you got here a big move followed by a very healthy consolidation and a pullback. Then you got another big move up to this level here at 30,000. And once again, a consolidation and a pullback, which is very healthy in the market. Then another one. So you could see the actual structure was creating a very good consolidation base for a big move towards the 2025 end of the bull market. But what happened here, this one candle changed everything. Because since then, we've had this big move in one go all the way here with a little bit of the consolidation and a pullback. And it looks like that we're now on our next leg up over here. And if you want to have a look at a ballpark target just by the structure of this chart, all you have to do is look at a 1-to-1 extension from the bottom here at 15,400 up to the first high of this big major move here, and then we align that to the correction at this point down there, and that's given us this high at this point, which we've just now broken out of. And if we were to do the next extension from here, from this point where the correction was, that gives us a target of about 80,000 in the short term. So let's see whether it gets there. That's just a target. I'm not saying it's definitely going to happen. There's no guarantees or certainties, all about possibilities and probabilities. So looking at the structure of this chart now, what we've done is we've come back to this level first at 48.49. We've got rejected at this point here. So if we draw our channel at this point, we've now clearly gone above that level at 48.49. And the next stop is going to be at these levels here. You can see quite clearly they're at 52 and 53,000. So this is the next channel now. And the one above that will be just at these tips of these wicks here, where there's a lot of support and a lot of resistance here. So this is going to be about between 58 and 60,000. So these are your three critical levels. And you can see with the pi cycle, that's just above it, which is at this point here, at the tops of the bodies of this candle here, at 64, 65. So the whole narrative is really playing out. So these are the real critical levels that we've got going up now. We're currently at a very critical level at 52, 53. And in a normal situation, we should see some sort of a pullback to this level here and then powering ahead. And if you have a look at the 8 EMA on this weekly chart, we can see that that's where the support has been so far for the Bitcoin price. We found support all the way along here. And this candle, which we pointed out a few weeks back, with a long wick at the bottom, this was our clue of where this price was wanting to go. And at the time, I remember saying that this is like putting a bottom in for the price, because there's a rejection of lower prices at this point. And since then, we've got an unprecedented move at the current price of 52,000. So we need to keep an eye on this 8 EMA, and the price is getting away from that at the moment. If you have a look at the Bollinger Bands, we're riding the tops of those Bollinger Bands all the way here. So we're really bullish, pushing the Bollinger Bands further higher and higher. So somewhere along the line, we are going to get a correction. But at the moment, it's just like a steam train. And I wouldn't be shorting this anytime soon. And a look at the 60-day cycle seems to be confirming the narrative that I pointed out in Monday's video. And that is that we made our start of the new cycle on day 43 here. I should move this line back here. So we've now started the cycle at that point. And we're going into this midpoint, this white line here. We're going into the midpoint with a bit more to go, as you can see. The midpoint is on the 22nd of February. So I can easily see another rise into this before we get the mid-cycle fall, before resuming our upward direction into the 60-day cycle low here. So the 60-day cycle would suggest that we are going to go much higher, and the pi cycle target is definitely on the table. Whether we achieve it, only time will tell. I'm only here to point out the possibilities and the probabilities. If we do play out like this, then we have a right translated cycle going into the halving, which is incredibly bullish, because we know that after the halving, even though we may get a little bit of a pullback, but certainly within a few months after the halving, we can expect the parabolic move for the Bitcoin price. So all exciting stuff. And for those of you who are interested in following our swing trades with the Bitcoin miners in the private members section, we've now got the round 6 ongoing since the 9th of February. That was just a week ago. And these are still ongoing trades. And the current state of play is that we are up there at 29.3%. So while we're averaging 29.3% from the 9th of February here, and everybody is raving about how well the Bitcoin price is doing, if we measure Bitcoin from the 9th of February here at the bottom to the current price at 52,200, Bitcoin has increased by 15%, and yet the Bitcoin miners have gone up double that at just under 30%. So this is the power of the leverage play that we've seen continuously in the portfolio that we've got running in the private member section. So this was our last year's portfolio of 2023. We started with 110 and ended 2023 up nearly 300% at 434,900. And while Bitcoin went up by 150%, during 2023, the Bitcoin miners that we chose for the portfolio down here, you can see the sterling performances over 400%, over 500%, 300%, 400%, 400%, etc. So that was an average of around 300% altogether. And that is the leverage play with the Bitcoin miners. And we've now continued that with the 2024 portfolio, and we're running 2 portfolios side by side. The first one is the passive portfolio, which is the continuation of the 2023. And we have a trading portfolio where we actively trade in terms of swing trades as well as ratio trades. And so far, up to date from yesterday's close, passive portfolio that we started at the beginning of January 2023, so 13 months on, we've gone from 110,000 to breaking the 500,000 level here now. So from the start of the year, we're up 15% on this one. And the trading portfolio, where we're using the swing trades and the ratio trades to add to this passive portfolio, that is up 32% so far. So that's double our passive portfolio there. And that's up at 575,000. Our target is 5 million at the end of this bull market. And that would be a 45x from the start of last year. And I want to bring a quotation to your attention. And this is a quotation that I actually showed in January 2023 when I started the private Bitcoin miners member section here at Wisdom Bites. And you've seen with the portfolio growth, we're doing absolutely nothing. During 2023, that portfolio went from 100,000 to well over 400,000. And this quotation really encapsulates everything about opportunities. We don't get many opportunities in life to achieve our goals, our targets, our objectives, our vision, our dreams. But when they come, you need to really grab hold of them. And what this caption says is that there is nothing which is more expensive than a missed opportunity. And we've still got anywhere between 12 months and 24 months to go. So this opportunity still exists. So even though you may well have missed the opportunity last year, we've still got quite a large proportion of this opportunity still ongoing. So while the Bitcoin miners are a leverage play on the Bitcoin price, so when Bitcoin goes up, the Bitcoin miners go up by a multiple of the Bitcoin price. And vice versa, in a bear market, in a pullback, in a correction, the Bitcoin miners will go down much further than the Bitcoin price as well. So this is what you would have to embrace with the Bitcoin miners. It goes up by much more than the Bitcoin price on the upside and much lower on the downside. And if you've got the stomach for the heady heights of the Bitcoin miners, then you can join us there with a growing band of Bitcoin miners enthusiasts. And it's a wonderful community of like-minded people who are all on an exciting journey to the end of this bull market. If you want to join us, all you have to do is below any of my videos, you can click the join button either here or here. And for the price of a coffee per week, you can have access to all the videos, all the swing trades, all the portfolios, and you have a choice of being a passive investor with the Bitcoin miners or an active investor, or just come and join their journey with us as a bystander for the next 12 to 24 months. It's your choice. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so, and also turn on the notification. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.